Good morning, my students. My name is Ejimado Emmanuel, aka DPO Connection, the teacher in charge of financial accounts. This morning, we shall be looking into a topic, end of the year adjustments. Objective. At the end of this class, the students should be able to know, number one, the reason for adjustment. Number two, the treatment of closing stock in the trading account and balance sheet. Number three, meaning of prepaid expenses, its treatment in profit and loss account and balance sheet. Number four, accrued expenses, its treatment in profit and loss account and balance sheet. Number five, prepaid income, meaning treatment in profit and loss account and balance sheet. Number six, accrued income, meaning treatment in profit and loss account and balance sheet. Number seven, meaning of bad debts, its treatment in profit and loss account. And finally, number eight, meaning of provision. Introduction. When a trial balance is extracted from the purpose of drawing up the final account, it will usually be necessary to make adjustments for items not yet dealt with or not properly dealt with in the books prior to the extraction of the trial balance. Closing stock. Closing stock is the stock of goods remaining unsold as at the trial balance date. The value of closing stock will be treated in the final account as follows. Number one, in the trading account, closing stock shall be deducted from the cost of goods available for sale to obtain the cost of goods sold, which in turn shall be deducted from sales to obtain gross profits. In the balance sheet, closing stock shall be shown under current assets. Prepaid expenses. These are expenses which are not yet due but have been paid as at the trial balance date. They can also be regarded as the value of benefit not yet enjoyed but which have been paid for as at the trial balance date. Now, if you are paying for a rent, let us assume you are preparing an account for the year 2000 and you paid for rent for the year 2000 and 2001. That of 2001 means that you have paid in advance. That is what we mean by prepayment. So when you are preparing accounts, that of 2001, which is not 2000, will not be included. It shall be what? Deducted. That is what we mean by what? Prepayment. Now, in the final account, prepaid expenses shall be treated as follows. Number one, in the profit and loss account, deduct the prepayment from the expenses shown on the trial balance in order to obtain the expenses incurred. Number two, in the balance sheet, show the prepayment under current assets. Accrued expenses. These are expenses due but not yet paid as at the trial balance date. They can also be regarded as at the value of benefits already enjoyed but not yet paid for as at the balance sheet date. Now, for instance, if you are supposed to pay for your school fees, while you have spent 2 months in school as a student, you have not paid for the school fees, and you know that by that time you are supposed to have paid for it. That money you are still owing the school is known as accrued expenses. They are expenses due for payment but not yet paid for. It is due for payment for that particular year and you have not paid for it. It is called accrued expenses. In the final account, accrual shall be treated as follows. Number one, in the profit and loss account, add the accrued expenses to the expenses shown on the trial balance to obtain the expenses incurred. Number two, in the balance sheet, show the accruals under current liabilities, meaning that expenses that is due for that year should be added to the expenses in the trial balance to arrive at the actual expenses for that year. And since you have not paid for it, you are owing. In accounting, anything you are owing for is treated as what? A liability in the balance sheet. I will be coming on live video for the practical aspect of what I'm saying now. Income received in advance. These are income not yet due, but have already been received as at balance sheet date. They are income received in respect of a period after the trial balance date. For example, assuming you are a government worker and we are in the month of January, but the government paid you both January and February. It means that you have received that income in advance. The one of February has been received in advance. We are in the month of January and the income of February has already been what? Paid to you. It means that you have received income in advance. You have not yet worked for it, but they have already paid you in what? In advance. That is what we mean by income received in advance. That is income not yet due, but has already been received as at the balance sheet date. Now, what are the treatments for income received in advance? In the profit and loss account, deduct the income received in advance from the income shown on the trial balance to obtain the income earned. Number two, in the balance sheet, show the income received in advance under current assets. Accrued income. These are income due but not yet received. Income due but not yet received as at the trial balance date. The accrued income not yet received in respect of a period ending at the balance sheet date. Now, what does it mean? The word accrued income means income that is due but not yet what? Received. For instance, if somebody has worked for January, February, March, and that person have not been what? Paid. Even as at March, the person have not been paid. That money that is being owed to that person is known as accrued income. The income is due but not yet what? Received. They are income due but not yet received. Accrued income shall be treated as follows. Number one, in the profit and loss account, add accrued income to the income shown on the trial balance to obtain the income earned. In the balance sheet, show the accrued income under current assets. Bad debts. This is a debt which has been recovered. This is a debt which become irrecoverable. The reason why a debt will be considered irrecoverable includes inability of the debtor to pay, disappearance of the debtor without trace, and the death of a debtor. When somebody is owing you, maybe as a result of death or the person disappeared, it means that that money has become irrecoverable. In accounting, we treat it as bad debts because that money cannot be what? Recover again. Bad debt, if already recorded, shall appear on the trial balance on the debit side. In this case, the bad debt is simply charged to the profit and loss account as expenses. No entry is necessary. Provisions. These are amounts set aside of profit to provide for depreciation in the value of asset or for the purpose of providing for a liability or loss. It includes provision for bad debt or doubtful debts, provision for discount on debtors, and provision for depreciation. What provision actually means money you set aside out of your profits in case if there is need for any other thing, like when your asset depreciate, you need to replace them. It's from that money you set aside, you use to replace them. In case if there is a debt you cannot recover, from those provisions you make, you can continue your business. Summary. Adjustment ensure that final account shows a true view of the transaction of a business and accord with generally accepted accounting practice GAAP. Information regarding the adjustment are usually disclosed as additional notes to the trial balance. Assignments. Explain the meaning of the following terms and their treatment in the final account. Number 1, closing stock. Number 2, prepaid expenses. Number 3, accrued expenses. Number 4, income received in advance. Number 5, accrued income. Number 6, bad debts and provisions. These assignments should be submitted to the school address listed below. Now, I shall be coming on live on a video for the practical aspect, where I will be demonstrating on the chalkboard, on the whiteboard, showing how we can prepare a final account with